please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. Hello and welcome to Halftime Report. I'm Sumaira Abdi and with me is Nigel D'Souza. Nigel, good afternoon. I wonder if it says anything that as the final countdown begins, we're all in black. So the mood seems a little bit somber, and actually that's what's being reflected in the market as well. It's quite a bit of trepidation actually ahead of the budget. For the market, we're now at the low point of the day, so it seemed like there could be some bit of buying, but once again, we're down about 0.25% on the frontline indices. Importantly, the Nifty is still managing to hold on to that 11,000 mark for now, though the Sensex has slipped below 36,000. The Midcap index also now down about 160 points.
That's right, Sumaira, but if I look at it on the positive side, even if we get a worst-case outcome tomorrow, then maybe, in fact, some part of that bad news could be factored in. So we are seeing selling on the frontline index, but in the mid-caps, there's so much of pain. Some of the stocks have lost between around 15 to around 25% of their market capitalization. So it seems that, in fact, at least going into this event, the street is factoring in, maybe some part of any kind of bad news that could come in. As Sumaira said, some of those pharma names, they are selling off. I think Sun Pharma has moved to the low point of the day. And UPL posted its results. Remember, the stock went to around 750 rupees. Now UPL is, it had a bit of a bounce in Monday's trading session. Now it's moving back towards those levels. So keep an eye out on that stock. First up, though, running you through all the top stories. The market remains on tenterhooks ahead of the union budget as positions lighten. Key indices slip close to around 0.25% each, while mid-caps, they take a bigger beating.
In key earnings today, ICICI Bank's profit is expected to fall 25%, but all eyes will be on the management commentary on stressed loans. Engineering major L&T is expected to report a good quarter. CNBC Tv18 poll pegs profit growth for the third quarter at 50%.
And a slew of metal companies also announced their earnings today. Vedanta is expected to report a strong set of numbers on the back of a rise in crude prices as well as higher base metal prices. JSW Steel, on the other hand, is expected to report strong earnings on the back of a spike in steel prices, though higher raw material cost will keep a check on the margins.
All right, with that, let's get started and tell you about all the stocks which are buzzing at noon. So it's time for movers and shakers. And let's start off with some earnings reactions. So BEL is taking it on the chin today, now down 3.5% after posting a weak quarter. Sonal, what went wrong for them?
Well, weak set of earnings, and clearly the street didn't like them. Well, though the revenue and EBITDA went in higher by a poll, but on a year-on-year basis, there was some decline. So the revenue went up by 23%, but the EBITDA went down by 8%. And that was because the employee cost went up by 33% because there was some pay revision and gratuity ceiling enhancement. So all this led to lower margins at around 17.7% versus an estimate of around 18.6%. The profits went also down by around 19% at 302 crores, and a poll threw up a number of 332 crores. So definitely that was a dampener, but the profits went down because of higher taxes, because earlier the company used to get some sort of benefits for investment in the R&D activities, which has been withdrawn, and that is the reason why profits came in lower, and that's why the results were weak.
Okay, all right. So now, thanks so much for that. Well, Ekta, there's a lot of pharma news that's coming in today. Tell us what's going on there.
Well, the kind of, weakness that we're seeing in pharmaceutical stocks is actually because of what's happening globally. If you saw the stocks overnight in the US market, the Dow Jones US Pharma Index was down 1.7% itself. The news which really stirred sentiment on the negative side within the US markets was that Amazon, Berkshire Hathaway, as well as JP Morgan are planning to create an independent health company. So now we don't know the details of where exactly they would start in terms of creation of this healthcare company, whether it would only be focused on insurance. What it does mean is that Amazon is looking at healthcare aggressively, and secondly, eventually there could be some impact on drug prices, even generic drug prices, and not just prescription drug prices. Separately, we had Trump in the State of the Union address specifically say that bringing down drug prices would be one of his priorities going forward, and hence that would probably indicate more measures in order to pull drug prices down. Remember that the US FDA has already been acting very strongly on that in terms of the faster pace of approvals that we have seen in any case. Now, separately, there is news that Dr. Reddy's and Natco would be in focus on account of this because of the multiple sclerosis drug, which will possibly see further competition from the likes of Momenta, which is expected to launch the drug soon enough. Remember that Dr. Reddy's has already seen a sort of delay in terms of its launch for Copaxone because of some queries that they've received from the US FDA. But this means that when they eventually enter the market, there will already be more competition in it. Plus, all of these stocks are still to come out with earnings. So I think there will be a little bit of trepidation ahead of that, except for Dr. Reddy's. The likes of Lupin, Sun Pharma are still to report their Q3 numbers. I also want to add that there is some news with regards to a recall of a particular set of drugs from Doxil injection drugs for Sun Pharma. And that's probably hurting sentiment a little bit, especially ahead of a halal inspection, which is due in the month of Feb.
All right, Ekta, thanks very much for that. Back to earnings. Then Naveen has a list of hits and misses. Naveen, what do you have for us?
So I'll begin with Ashoka Buildcon. That stock has been able to hold its head above the water in a weak market, given the fact that the revenues have been up close to 26% at around the 660 crore mark. PAT is also up 21.5% around the 51 crore mark. Other stock that I'll be tracking is Orient Bell. Remember, the stock has given a revenue jump of close to 17% at around 165 crore, and the PAT jump has been quite decent at around that 58% mark. On the other hand, Reliance Naval, bad days continue for Reliance Naval in terms of the numbers. A revenue down by close to 56%, but the loss, look at the loss, that has expanded and has come in at around 166 crore versus 132 crore in the base quarter a year ago. Last but not the least, strong numbers from JK Paper, and this has been the case for the last 3 to 4 quarters, which continues with a revenue growth of close to 24%, but you need to look at the margin growth. The margin jump has been 260 basis points, around that 19.5%. And remember, JK Paper is one of those companies in the paper sector which has been able to post margins above that 17-18% mark. So thumbs up on that, but more good numbers than bad. Back to you.
Okay, more good than bad in an otherwise weak market. Thanks so much, Naveen, for joining in, giving us those details. Well, let's do a quick recap of all the buzzing stocks we just covered. We had BEL, Ashoka Buildcon, Orient Bell, Reliance Naval, JK Paper, and a whole host of pharma stocks. Dr. Reddy's, Oro Pharma, Natco Pharma, as well as Lupin. But moving on then, the Delhi High Court is set to pronounce the verdict in the Daiichi Singh brothers arbitration case. That's scheduled for later today. Ashmit's here with all those details. Ashmit.
Well, D-Day today as far as Daiichi as well as Fortis's Malvinder and Shivinder Singh are concerned. The Delhi High Court will be pronouncing its judgment in the arbitration case between the two sides. At stake is an arbitral award of 3,500 crore rupees payable by Singh brothers to Daiichi. Now, what's the background story to this? Well, in the year 2008, Ranbaxy, that is where the Singh brothers had their stake. They sold their stake to Japanese drug major Daiichi Sankyo for a consideration of about $4.6 billion. The story, however, began to unravel about 5 years later in May of 2013. That's when the US FDA had raised questions of irregularities as far as Ranbaxy is concerned, and Daiichi had to cough up a settlement fee of as high as $550 million. Now, unimpressed with that, Daiichi had moved a Singapore arbitration tribunal seeking damages. And what's critical here is that in April of 2016, to be specific, the Singapore Arbitration Tribunal had awarded an arbitral award of 3,500 crore rupees in favor of Daiichi, payable by the Singh brothers. Now, Daiichi had moved Delhi High Court seeking enforcement of that 3,500 crore rupee award, and the big question on whether or not that amount will have to be coughed up by Singh brothers will come today by way of this judgment. Expect this judgment at about 2:15 p.m. Back to you.
All right, Ashmit, thanks very much for that heads up. So we'll keep our eyes peeled post-lunch. A quick break now. Up next, Paisalo has posted a weak set of numbers in Q3. Sunil Agarwal, the MD of the company, joins in next with the fine print. Stay tuned.
Well, there are a couple of stocks that are putting in a bit of a fight as we speak. We have something like a Tech Mahindra that's moving higher. And I think another stock is Yes Bank. That's the other stock that I was looking at. That's seeing some green actually on the screen. So pull up Yes Bank as well. So select stocks doing fairly well. Well, we have Alembic Pharma. They've come out with their set of numbers. I'm not too sure whether we have a poll for that one. But the EBITDA number, that's shown a good growth. In fact, the margin growth as well is quite good. So you're seeing expansion of nearly around 350 basis points or thereabouts in terms of margins. So good going, it seems, out there. And even the net profit has jumped up by around 50%. So those numbers look like an all-round good set of numbers. Top line, only around 8% growth, but the operating profit, just take a look at the growth over there. That's better than the top line growth in percentage terms, telling you, yes, there is some margin expansion. And I don't know why, but in fact, the bottom line as well is seeing a growth of around 50%. Besides the operational performance, maybe in fact, we'll have to track whether something went down there. But a good set of numbers on a year-on-year basis is what we could work with. But I think we could move on then. SC Investments recently changed their name to Paisa Low. That in fact saw weak sequential earnings as a huge rise in employee expenditure on a quarter-on-quarter basis. That's what hurt their earnings. To understand what's going on and to decode those numbers, Mr. Sunil Agarwal, the managing director of the company, joins us now. Hi, Mr. Agarwal. Thanks so much, sir, for joining in. First things first, what was the growth in disbursements?
The disbursements cumulative stands at 1,055.8 crores. Third 55.8 crores. Third quarter was 392.66 crores. So on a 9-month period, we have grown by about 8-9%, and the assets under management are 1569.92 crores. And next quarter, we are targeting about 600 crores of disbursement, thereby trying to reach about 1750 crores of assets under management by the year end.
Okay. Mr. Agarwal, in terms of the future growth now, what will be the segments that you're likely to focus primarily on?
The growth segment is, as we have launched the app-based financing, only on 24th only it was launched. So for next few quarters, we are concentrating on that area of app-based financing, loans up to 50,000 rupees, complying all the legal requirements of the country, and growing on that sector.
Mr. Agarwal, then why did the finance cost shoot up?
The cost of funds have not gone really up, but the cost of the borrowings have increased in the this quarter. Borrowings have increased in this quarter, so the cost of funds have gone. The interest payments have gone up because of that. So they would start getting rationalized this quarter, because borrowing which was done in last quarter has been deployed, and it would start giving results in terms of income in this quarter itself.
Okay. What were the NIMs this quarter, and where do you expect your net interest margins to sustain, say, in FY19?
The NIM in this quarter actually was at almost 8.75%. And we are very confident of maintaining this in at least FY19 for sure, because our fundraising plans, which are now getting concretized, are on track, and we are expecting to raise some low cost funding, as well as our interest rates with the current lenders is also getting rationalized in another 1 month or so.
Well, Mr. Agarwal, being a digitized platform, your OPEX costs, that increased massively on a sequential basis. Will the OPEX adding continue in the coming quarters as well?
The OPEX which you are seeing in this quarter, because the app was launched in this month itself, so there is a lot of OPEX which went into the app launch and app preparation and app bringing up the app to the market level in the last quarter. So going forward, the brick and mortar business is going to continue as it is. We are really not looking at very high number of growth, barring 1 or 2 offices or 1 or 2 branches getting added, just to make the operations sustainable at various locations. But the operation costs are going to rationalize and drop with the growth in business, because the app-based marketing and the app-based sourcing business is not going to cost as much as the brick and mortar business is costing us.
Okay. Now, could you tell us what has been the movement in asset quality in Q3 compared with the previous quarter?
The movement it has been almost flat. We have written off about 9.21 crores in last quarter. This is in line because we write off whatever is NPA, which is 90 days for us in the current financial year on quarter end, although we continue to do our recovery proceedings. So what 9.21 I am saying is net of the recoveries made in the last quarter.
Let's talk about asset quality then, sir. What is the gross NPAs in the past quarter?
The gross NPA in Q3 would be about 14 crores. So this entire, because 5 odd crores was recovered, so the net impact, the entire 14 crore has been written off, but 5 crore was recovered from the previous write-offs. So the net impact is 9 crores. Yes.
Okay. So since you've given the FY18 guidance, what would be your guidance for FY19, say in terms of loan growth and the disbursements?
In normal circumstances, I would say about 20%, 25% is what we would look at. But the app has got very, very good response. It is not what I expected in first 7. It's actually only 6 days today. We launched it on 24th. So and with 3 days of holidays also falling in between. But the response has been far better than what we expected. So just give us a month more. Let the app and the inquiries stabilize. We are ourselves now in a total confusion as to what is going to be our fund needs and what is going to be our disbursements for the next few quarters.
All right. Thanks very much, Mr. Agarwal, for joining in. All the very best for the rest of the year. So NIMs at 8.75%, the management expecting NIMs now to sustain going into FY19, and the big bet, of course, for them remains the newly launched app. A quick break. When we come back, it'll be time for the technicals of trade. Ashwini Gujral and Sandeep Wagle will join in with fresh trading ideas. Stay tuned. Hi, welcome back here with Halftime Report. Well, it's status quo for the market as of now. The Midcap index has aggravated its fall a tad, so 240 points now lower on that index. But let's get in some global opinion that's coming in. We spoke with William Boyter, the chief economist of the Citigroup, earlier this morning to get a sense of the global positioning and also the outlook on the emerging markets going ahead. So let's hear him out.
Well, I do not think that we are set for a period of significantly higher growth in the next decade than we've had, in the last 5 years or so. Global potential output growth is at market exchange rates is about 3%, and I don't think it's going to improve much. If anything, it's down, as the World Bank pointed out, because of demographic trends and because of, on the whole, low shares of capital expenditure in GDP, as well as long tradition globally of overregulation. In the US, I think there is most clearly evidence of irrational exuberance, that the growth, especially the growth of corporate earnings that appears to be priced into the stock market valuations, seems unrealistic, over the top. Elsewhere in the world, that is much less obvious, and in a number of emerging markets, I think there is no evidence of significant froth in equity markets yet. For 2018, our forecast is robust growth, cyclical recovery globally, including virtually all emerging markets, including specifically India. We again see China also at around 6.5% a year. We see the US set for a steady, albeit very gradual, normalization of the policy rate. It is just part of a very gradual normalization. It only sort of gets attention because it follows a long period in which, bonds at up to 5-year duration were actually negative, and where the US 10-year hardly dare go above 2.5%. So it is still extremely modest and very gradual. It's only through the biased windows of the last 10 years that this seems startling.
Well, there are select metal stocks that are taking a bit of a knock. JSW Steel has moved to the low point of the day. Our ticker team was talking about SAIL as well. But the other big one that's taken a bit of a hit is Tata Steel. Just pull up the intraday chart there. That stock, in fact, has moved to the low point of the day. Remember, even though it's X, right, still, in fact, your break-even price, if you bought it yesterday at around 770 rupees, and you would have got, those 2 and 4 shares, so close to around 6 shares for around 25 shares that you held, then your break-even price would be around 710. Now, in fact, the stock is trading below that level as well. So just keep that in mind. There appears there is some selling. Just doing a quick check, there's no real big change in terms of prices. Even in terms of Chinese prices, what I understand as of now, there's no big change as we speak. And also we had ArcelorMittal's numbers that did come out. But remember, Tata Steel now is more domestic play than an international play. And those numbers as well looked better on a sequential basis. So that clearly appears there is some profit booking that's been seen over there. Hindalco, for example, that was holding well in the green, and that stock as well has come off the high point of the day. And there's plenty of money that people are making on these metal stocks. So it appears there is some profit booking getting to this big event on the metal index. The intraday chart will tell you at one point of time it was one of the only indices that were holding in the green. Now it's moved in the red as well. And even Divi's Laboratory, that's the other one that I'm looking at. That stock has slipped considerably in the last few minutes. But as promised, let's get a quick technical check. We have Ashwini Gujral who joins in. Ashwini, how are you reading this? We are defending the 11,000 odd mark. But would you trade the Nifty? Is there a trade out there? Could we bounce back from this 11,000 odd mark?
See, I think that's something that you should try to do. As we speak, HDFC is making a fairly sharp move. So if big stocks start to move, then it'll be a bit difficult for the market to, fall. Also, I can see, tech stocks have come back from the lows of the session. So things like NIT Tech, TCS, etc. Because, we've had a fall all, morning until afternoon, plus yesterday. So kind of bit of exhaustion is also likely now. So if you were short from yesterday, today morning, etc., I think it's time to cover shorts. And in case Europe opens better than expected and, there's a bit of short covering before the budget, I think market could get close to unchanged. So if not go long, I think covering shorts right now is a good strategy. As far as individual stocks are concerned, NIT Tech is a buy with a stop of 850, target of 885. TCS is a buy with a stop of 3100, target of 3220. And Jubilant Food remains a sell. With a stop of 2060, target of 2000.
All right, Sandeep Vakle is also joining in now. Sandeep, good afternoon to you. What are your trading ideas?
Good afternoon. I would go with a sell in a National Aluminium NALCO, stop loss of 77, target of 70, and a buy in a Tech Mahindra, stop loss of 610, target 630.
Okay, all right. Thanks so much for that, Sandeep, as well as Ashwini. Well, that fall is being arrested because, as Ashwini said, a couple of those stocks are fighting for the Nifty. So I think HDFC as well is fighting as we speak. L&T as well has spiked up. So just keep an eye out on both those two stocks. HDFC, that's the big boy, one of the biggest weights on the Nifty. And that stock moves higher, definitely helps the bulls. L&T is the other one, comes out with a set of numbers today. That's recovered close to around 1% from the low point of the day. But on that note, I think we'll slip into a short break. You come back, we'll continue our focus on the markets. Welcome back then. Some sign of some stability actually in the markets. A couple of stocks that are fighting. HDFC, that's the boy in there. If it wasn't for that stock, we'd have been deeper in the red. Let's pull up a contribution chart as we speak. HDFC moves higher. That definitely helps our cause. Even Mahindra & Mahindra, in fact, is moving higher. So let's pull up both those two stocks, and maybe the contribution chart will give us a picture that HDFC, I think, single-handedly would be contributing close to around 8 points, even Reliance Industries. So between them, we have close to around 16, 17 points that are coming in only from those two heavyweights. If not for them, we would have been down more than 40, 45 points as we speak. So keep an eye out on that one. But the other big boy today is ICICI Bank. That comes out with a set of numbers. Abhishek has been waiting by. He's going to tell us, what do we expect from ICICI Bank? Abhishek, over to you.
Well, Nigel, the key focus of the entire street will be on the divergence. Now, remember that, in the last quarter, Axis Bank and Yes Bank both reported divergence. And for ICICI Bank, it was under due diligence of RBI. So they will be reporting divergence in this quarter, and we need to see how that shapes up. And that is based on FY17 loan book. Now, slippages have been around 4,500 to 4,700 crores. So anything below that will be positive. Some of the analysts on street like IDFC Securities are expecting a slippages of 5,300 crore. Now the drill down list or the watch list, that stands at 19,600 crores. So one account, that is JSPL, came out of restructuring phase for other banks like Axis and Yes Bank, and ICICI Bank is one of the bankers. So how this book behaves, the watch list moves from here onward will be seen very closely. The movement in other restructured portfolios or stressed assets like S4A, SDR and 5/25 will be seen closely. Loan growth actually came in last quarter at 6.3%. Analysts on street are expecting 8 to 10% loan growth. Our poll suggests an NII growth of close to 10%, while net profit at 7-quarter low of 1,816 crores. Back to you.
Thanks very much, Abhishek. And from the metals pack, we have Vedanta and JSW Steel that will be reporting their numbers today. So, Nigel, what are the expectations? Let's begin with Vedanta.
Yeah, let's talk about Vedanta first. In terms of their numbers, if you're looking to play the entire base metal rally, then Vedanta is the stock. Also, if you just take a look at what's happened to crude oil prices, Vedanta definitely would be one of the beneficiaries. Now, in terms of numbers, top line growth that we're working with is around 15%. The margin should be more or less stable at around 27-28%. And the profit number should come in higher. Just to tell our viewers, Hindustan Zinc already comes out with a set of numbers. Vedanta holds 65% stake in Hindustan Zinc. So close to around 50% of the EBITDA is already factored in from Hindustan Zinc. What are the key factors we'll be looking at in terms of these numbers then? The base metal prices, they're up between 15 to around 25% in the last 1 year. So that's been pretty good going. But we'll focus on segments. Aluminium segment first. The Jharsuguda 2 unit, that smelter in fact has been ramping up gradually. And that's what's going to help the aluminium business, give a better top line growth over there. The second factor in terms of aluminium is that, in fact, the Jharsuguda 1, that had a bit of a hiccup in the first half of this year. The second half of the year, in fact, things have stabilized, so it should pick up over there. So the top line will be good because you have higher volumes, higher prices as well. What hurts them is that they're not, they source their bauxite, the alumina from outside. So alumina purchases is something that will squeeze their margins or in fact restrict the gains that we could see in terms of the aluminium business. Motilal Oswal, they have come out with their estimates. They're expecting around 680 crores in terms of the aluminium EBITDA. Aluminium will be good. Copper will not be so good. The TCRC margins, well, we have seen a bit of a compression over there. So that's what will hurt them. And the EBITDA, the number should be around 330 to around 350 crores. Power business as well, the Talwandi Sabu, in fact, over there we have seen that that's been picking up. It's been functioning at around 85 to around 90%. The EBITDA number there you should watch out for is around 470 to around 500 crores. And oil prices, as I said, they have been moving higher. So that should contribute substantially, should be at around 1,300 to around 1,400 crores. We'll be waiting by for these set of numbers. We'll be getting it in the second half of trade.
Okay, and what about JSW Steel?
Very quickly, I'll run you through JSW Steel. Then ferrous prices have been moving higher. JSW Steel as well. We already have the production numbers over there. And that's what give rise to a good 22% growth on the top line. The margins as well should see a bit of an expansion. And the profit number should jump up by around 60%. As I said, top line will be driven by volume. So the sales volumes we're working with a growth of around 10%, telling you that in fact the realization should pop up by another 10%. Production numbers are already in the price. The EBITDA per ton, well, they'll gain from realizations because the export contribution has been moving higher. That's point number one. Domestic realizations as well have been moving higher. But what offsets those gains is that coking coal costs have been going higher. Even iron ore prices have spiked up owing to NMDC price hikes, and they're not integrated. So they get hurt over there. The average coking coal cost, in fact, for the last, on a sequential basis as well as on a year-on-year basis, has been around $180 to around $190 per ton. EBITDA number, that's the big focus area for the domestic business. That should come in at around 7,900 rupees per ton. Also keep an eye out on the coated steel business, smaller part of the business, but keep an eye out on that one. Should be at around 140, 150 crores. And even the US business, that has delivered profitability in the sequential quarter. So, Street is factoring in a profit number yet again.
All right, quick break then. Up next, lots more on the market, lots of stock-specific action and some more earnings previews. Stay tuned.
Well, the Nifty bank continues to do a relative outperformance as we speak, but that's some important news that's coming in there. There's an earthquake that's hit Delhi. There were some tremors that were felt in the NCR. Important news that's coming in there. There's an earthquake that's hit Delhi. There were some tremors that were felt in the NCR region as well. We'll try to get in a reporter to give us further details on that. I think Srinagar as well was mentioned in that. So we'll wait by to see, what is the magnitude of that, if we could get a reading over there as well to understand, hopefully that everyone's safe. In fact, the earthquake hits Delhi, Jammu and Kashmir, and there were tremors that were felt in the NCR region as well. Just hoping, in fact, that everyone is safe out there. But we have more details, actually. The tremors have also been felt in Punjab and Haryana. So that's not very good news, actually. But let's wait by. Let's get in some more details. Maybe, in fact, we'll try to get our sister concern to pull in some more details, and then we'll get a hit coming in on that front as well.
A little severe. I mean, I don't have the exactly what it measures on the Richter scale, but from some of the feelers that we've been getting from people in Delhi, I think it is a little bit severe. So it might be a bit of a bother, and perhaps it'll be good to touch base with somebody and find out exactly what the magnitude of the earthquake is and its reach as well. But for now, let's quickly focus on some earnings as well. Escorts will be on our radar today. They'll be reporting numbers. Sonia is here to take us through a quick preview. Sonia.
Well, thanks for that. The tractor business of Escorts has been doing exceptionally well. In fact, this quarter is no different. We're expecting a strong set of numbers for the company. So the revenue growth of 14.5% is what Motilal Oswal estimates. That would be because of an 11% domestic volume growth in the agri-machinery or the tractor segment. Now, the 80% of their sales comes from the agri-machinery business, and the operating leverage over there will make sure that the margins improve to almost 10% versus 8.5% same quarter last year. But the other businesses which were not doing so well have also started to pick up. The construction business, which was loss-making for very long, saw a turnaround last quarter. We're expecting it to improve this quarter as well. The railway business has been getting more orders, and on account of that, last quarter was a good one. We're expecting revenues to jump this quarter as well. Remember, the stock is not cheap. It's more than doubled in the last 12 months, and it is trading at about 25 times FY19. But most believe that because of a good Rabi season, because of a stronger tractor sales, if the trajectory of double-digit growth continues, then the stock could continue to move higher. So expect a strong performance from the company this quarter. All
right, Sonia, thanks so much for that. Well, we have some few more details that are coming in there. In fact, the magnitude of 6.2 in Afghanistan and the Tajikistan border region. So that's one, I think, and in fact, even Pakistan has felt some of these tremors. So we'll wait by, but our ticker team is just filling us in with more details. We'll try to get a phoner going with someone who's tracking this, who can give us the exact measure of in terms of an impact. But we were doing earnings, so let's continue with that. FMCG major Dabur, in fact, will be in focus. They come out with a set of numbers. Price cuts post GST are expected to aid volumes. Manglam joins us to run us through those expectations. Manglam.
That's right, Nigel. A good set is expected. Volume should be aided by a lower base and price cuts, and also the new launches that the company's been doing. So we're working with a 12 to 15% range on the domestic volumes, and this, remember, comes on the base of a 5% decline. It's an important quarter for the company. Last quarter, we saw signs of improvement in their oral care as well as the foods business, the juices business. Let's see whether that sustains or not. Overall, we're expecting an 11% growth on the top line, EBITDA of around that 400 crore mark, 20% growth seen there, 150 basis points improvement on the margins, and we're looking at a net profit growth of 17.5%. The number that we're working with is 345 crores. The most important number will be the domestic volume number. We're seeing anywhere between 12 to 15%, aided by, like I said, the lower base, new products that the company has launched, recovery in the trade channels, and also the price cuts that they've taken post-November 15. The management has been saying that the second half volumes will be much better than the first half. They are seeing recovery in the rural region. That is something we'll be watching out for. And for Dabur, international business is also important. 30% of their revenues does come from international business. Last quarter, again, we saw some stability. It'll be interesting to see whether that stability is maintained or not.
All right, Mangalam, thanks very much for that. A quick break. Up next, we'll focus on the commodity space. Manisha Gupta joins in. Also, Dharmesh Bhatia of Emirate NBD will be with us.
Well, just focusing on the market, any kind of a bounce is getting sold into today. So that's not very good news. But thank God for a couple of these stocks. ICICI Bank has recovered from the low point of the day. It was down 2.5%. Now it's down 1.5%. So that's what's helping the Nifty's cause. But let's shift focus away from equities. Manisha Gupta is with us. She's going to run us through all the action in the currency and commodity space. Manisha.
Thank you so much for that, Nigel. I know we've been talking budget all the time, but there is so much happening in the global markets as well. You had the China PMI data, which has come in less than what the markets were expecting. You also have had the US president talk about the infra spending to the tune of $1.3 billion, but there are no details on that. But apart from that, it is going to be the US Fed meeting announcement today, the US jobs data on Friday. So it is a data-heavy week in that sense, and that is what is keeping the markets jittery. Some profit-taking is what you have seen for the crude oil prices, but there also has been some opportunity buying that you have seen come back in case of metals, especially the outperformers. Nickel and zinc are back in the green, and 0.5% higher is how it's trading on the LME and the Indian markets as well. Dharmesh Bhatia joins us to give his strategies on the same. Dharmesh, what is your sense, especially when it comes to metals? Where do you see the buying continuing going forward?
Good afternoon. I still expect the market to show outperforming. The base metal is still firm, especially the Dr. Copper. You can see the market has shown in domestic market just because of rupee concern, the market is stabilized. For international LME, the market is on average hovering around 7,000 in LME. In COMEX also it's firm. Short momentum, I'm expecting the market to show firmness around 5 to 6% from the current level also. Just because of rupee, the market in domestic price, you can see 440 to 460. But overall, I'm still bullish. I'm expecting the year-end target to be around like 480 to 500 levels. So any decline is a good level to accumulate base metal. And 2015, 2016, or 2017, all 3 years back-to-back, zinc, Z and aluminium, all 3 are outperformed. Even copper has outperformed. So I'm expecting 2018 will be the base metal king and market will outperform other asset classes.
All right, yet another year where we can see the base metal prices to continue to outperform. But how are you looking at the crude oil prices now? Because we clearly are $3 off the 3-year highs that the crude oil prices hit in the last week at these current levels. Of course, we are assuming a lot of speculative long positions may have gone winded out as well. But are you buying, or do you see this correction to continue going forward?
I'm still expecting the crude oil to outperform. Last almost 3 months, I'm continuously on bullish side, and I'm still expecting the market to head towards the north. There was just a profit booking on higher level. It can be a psychological level of $70 in Brent, where market was trying to gauge, but it showed a sharp correction. Last 2 days, back-to-back 2% correction can be seen. But fundamentally, the market is still firm. I'm expecting this rally to continue, and with Saudi market showing a very firmness, and everything is getting settled down, the dust has settled. So you can see the crude oil continuously heading towards the previous high.
Okay, all right. Thanks so much, Dharmesh, as well as Manisha. But just keep an eye out on the markets. We are struggling to defend that 11,000 mark now. We're virtually at the low point of the day. And it's not just the large caps. Take a look at a couple of these stocks. Vakrangi. Just pull up the intraday chart over there. The stock is down 17-18% today. For this week itself, it's down closer on 25%. Sharp downtick is what we're seeing on that one, and that's likely to continue. The frontliners start seeing selling. The mid-caps, they're going to take a bigger beating, in fact, as we speak. The advanced decline ratio as well is worsening as we speak. So we'll wrap up on this show. You stay with us. Business Lunch. Take all the action ahead.